Good afternoon, everyone. Juan Grimaldo here with the Grimaldo Group. We have a couple guests here today. There's a lot going on out there with vacant land and new construction. So we have Michael and Julio from 1AC Credit Union. They're here to talk more about what offers, what products they offer, and tell us more about yourself.
I am Michael Jester. I'm the regional manager of 1AZ Credit Union. So we're the local credit union. We have 9 branches throughout Maricopa County. So I am like the regional manager of the branches, and I have 5 loan officers. Julio.
Yep, Julio Zuniga. I'm a mortgage lender out of our Monroe branch on 19th Avenue in Monroe, next to Van Buren. Credit union, it's been great. I've been there close to a year, and we have a lot of good products, excellent rates. We've been there for 70 years. Formerly Arizona Credit Union, Arizona State Credit Union, and then now 1AZ Credit Union.
Okay, awesome. We actually met Julio through another friend of ours who's a lender, and we helped him purchase his home. So thank you for giving us the business. We appreciate you.
Yeah, no, it was great. You know, I love the Juan Grimaldo group. Excellent. With Claudia was my realtor, and she was always available and negotiated, and we were able to get a really good deal on the house I bought.
Beautiful. So we wanted to talk about this because we have some need for construction loans and also to buy lots. So tell me more about what products you guys have. What are you seeing out there too? I know the rates went up, so there's a lot to talk about. So let's first of all, what is it you want to talk to about first?
Well, we can start with the construction loans.
Okay.
That is turning a little bit into a niche because of the market. A lot. And with us, we are able to do a one-time close, which is, I think, one of our big niches. What that means is that once you're pre-qualified, once we get your rate, we can lock that rate in, and it's not going to change at the end of the bill. You won't have to qualify again. It'll automatically turn into your 30-year mortgage.
Currently we are doing a 5-year ARM, and we also do a 15-year fixed under construction. However, we're bringing in, that's right, within a couple months, a month or two, it's in the works for our disclosures, compliance, things like that, a good 30-year fix, which we're finding a lot of demand for that. So there's a big demand right now, in the market for construction loans, lot loans. Currently, we're not taking the risk of lot loans. However, I do know a few individuals that can help us there.
Okay. So when you have a construction loan, do they have to own the lot free and clear?
They do not.
Okay.
So we will pay off the lien as part of the construction loan.
Oh, wow.
So if, for example, if you're going to do the lot and construction at the same time, then we can, which is hard to do, right? You have to have the builder, the plans, the permits, and all that stuff, and it has to work coinciding together. If that doesn't happen, which again it can, and we can do a land and the construction at the same time, if that happens, but it's very rare, because people are going out there buying the land first, maybe finding a private money loan, or I know there's a couple lenders out there that do the lot loans for now. We're talking about bringing back the lot loans. We used to do it, and we did a good job. But we just don't want that on our books right now.
Is it too much risk, or what is it that you guys...
It could be. So what was happening before is we were doing 3 and 5 year balloons, expecting people to build within that 3 or 5 year period, and they weren't. So it's sat on our books. So we portfolio all of the loans, like lot loans, construction, which jump in anytime you want. But so we portfolio that. We do. Meaning we are the investor. It's coming from credit union money, 1AZ Credit Union, again, formerly Arizona State.
Right.
October 31st, 1951,
Wow.
Oldest credit union in the state of Arizona was, still is, I believe. But yeah, we changed our name for branding reasons back in 2016 because everybody had Arizona in it. That's
awesome.
Yeah, we process and underwrite in-house for construction loans, jumbo loans.
So you were also mentioning that there's other products that are coming out, that being the lots, maybe being one of them. You were also mentioning about the ARMs, right? So for those of you who don't know what an ARM is, it's an adjustable rate mortgage. Do you want to explain more about how that works?
So we have I think a 5-year, 7-year, and
10 years.
And and we have a 10-year one
Which
as
is
well.
great.
It'll be a fixed rate for that period, either 5, 7, or 10, and then after that, it'll adjust with the market every 6 months, and it'll be amortized for 30 years.
So what I want to do is differentiate the two for everybody. So on our construction loans, we do 5-year ARMs and 15-year fixed currently. However, we are going to incorporate 30-year fixed again. Like I said, we're getting the disclosures and going through, compliance, those types of things to make sure we got our ducks in a row for the 30-year fixed and have the proper paperwork. So that's for construction. Now we do a lot of great things. When you get into jumbo products, guys, we're a quarter to 3/8% better than the market.
Oh wow!
Bottom line. I mean, I do the market analysis. That's my niche actually. But we do so many other things too. But the portfolio, like Juan was saying, or Julio was saying, 5, 7, 10-year, and 30-year fixed. We do it all, and 15-year fixed. We portfolio all that on jumbo money. Actually, we portfolio anybody doing 10-1 conforming. We portfolio anyone 7-1 conforming, 5-1 conforming. The only thing we do with Fannie is 30-year fixed and 20-year fixed. Okay. So think of it as a credit union, outside the box type stuff. We do it.
What about the overlays? Because I know that could be a little intimidating when people go through a broker and then going with you guys. So how does that work? Do you guys pretty laxed or?
We're direct to Fannie Mae.
Okay.
So when we do our 30 or 20-year fixed,
it's basically their guidelines.
Yes, and we actually, when we do our portfolio products, again, it's going to be on our books. It's plain and simple. Portfolio, it's on our books. We're the investor. We have 150,000 credit union members now, which we had a gigantic growth. It's open to anyone, by the way. $5 opening a savings account.
And there's no charge for anything. That's why I like the credit unions. Actually, bank with you guys for that reason. And again, I try to stay away from it so that I can use it as a savings account. But
that's okay.
It's a good. It's good to know that you guys offer all these products beyond what we typically think. Just go in there for a car loan or something basic. Well, there's construction loans as well, and I know that there's a huge boom in that regard because there's no inventory. So what people are resorting to is they're now going and looking for a piece of land, like you said, either seller, carry back, private lender, figure out a way to get it, and then they start building, but then they run out of cash. So what would be the ideal situation? Because I'm sure that if they started the construction, maybe it's going to be more difficult to finance, right? Or is it the same process?
The ideal, in my opinion, is they own a lot free and clear, but they can have a lien against it. If you have a private loan against it, we'll pay it off part of the construction. If you own it free and clear, that's like a down payment. So if you buy a lot, I'll give you an example. Is it okay? I'll give you an example.
Oh yeah, I'm actually at that boat, so I'm
actually. So let's say you have 150,000. Okay, guys, the way, and this is where I don't want to get too detailed with everybody. That's why the professionals will help you guys out. But let's just say you bought your lot less than a year ago for 150,000. It may be worth 200,000 today. I'm just giving you an example.
Let me give you a true example.
Okay, go ahead.
I bought this lot for $40,000 about 2.5 years ago.
Perfect.
It's worth about 180.
Perfect.
I have the plans.
Oh, perfect.
I'm waiting for the drinking water company to install the water meter.
Yep.
So I'm ready to go. What will be my next step?
So guys, his lot is worth 180. That's instant equity as a down payment toward his construction.
Love it.
So if he's going to build, let's say, well, we're not going to go hard costs, are we? About how much you going to build? You want to go there?
The cost, based on what I have and based on experience from other people, I say 280, 300,000.
Okay, so great. So he's already got a huge down payment of 180.
That's awesome.
Because the appraiser's going to go out there. So they're going to go out to the vacant lot. They're going to have your plans, elevations, everything from the architect. Then they're going to go, okay, I see comparable sales in the area, and they're going to probably appraise it 300 plus another 180. Let's call it 500 to scenario. Okay. Well, you can borrow up to 80, 90%. We'll go up to 90%.
Wow. Do I have to hire a contractor to run those shows, right?
You have to have a general contractor.
Okay.
Yes. We're trying to get into people that own their own construction company, overbuild. We're not there yet. So.
Okay. Yeah, because that would be the only hurdle that we have, because obviously we want to save as much as possible. And but again, that's a great choice.
I have to have a general contracting license, obviously. So liability, certificate of liability,
of course. Yeah, you want to make sure that everything's not. You want to cover your asset.
And we do help people cover their asset as well. So we do. Julio can tell you about this, but we do. We have the builders approved before
Yeah.
People walk in, so they know they're protected. And we have a lot of approved builders here in Arizona already.
So do they have to be approved with you guys, or can they? I have a general contract that I would like to use. Is that okay?
He fills out an application. They're used to it.
Okay.
Yeah.
They're used to
Perfect.
one. They're
They know the
accustomed to it.
process.
Yeah, and it's easy. Something 3 or 4 page. You know, if it's over 10 years of experience, then it's really easy. If it's
Love it.
a little less than 10, we might do a little background check a little bit more, see their current projects or what have you.
Got it.
So, but yeah, we do a great job. We, you know, the draws. This is important to a lot of people.
Yeah. So how to guide me through the process?
Yeah.
Let's say I bring my loans. We got a contractor. You approve me for the loan. Does it? So let's say the appraiser says, you know, it'll after construction or it's built, it's going to be 600,000.
Yep.
I get 480 for the construction. How do I start?
Yeah, so
Drawing
that's a
loan.
great question. So you'll start first by getting your loan up front, right?
Right.
Well, the first thing we do is we have, you know, Julio will pass out you got to get your builder approved. They'll pass out the application to the, you know, to you, or you can work together with the builder at the same time. And then they fill out this 3-4 page application. That's approved, right? You get approved. It goes through our credit risk department. I'll take a look at it before it goes, make sure they're up and up, right? Second piece is once you can start applying right away. I mean, chances of a good long-term builder getting not approved is difficult not to get approved, you know? And so we'll start working on your profile at the same time and putting you into the application process. But the key is having a contract in place. Once you have a contract from the builder, then you're ready to go. So
Okay.
so we have, if you make your own contracts, Mr. Realtor over there, with the builder, you know, it's usually 5 or 6 stages, right? When you build a house, you got 5 or 6 stages, you know, mostly you do 5 or 6, and then at the end of each. So let's say we get our lot loan, we get our construction loan. Okay, we got your loan, which will be done within 60 days. Okay, and during this initial time period of you, okay, let me start from back. Let me back up 1 second.
Sure. Go.
I apologize. So, okay, you're trying to get finance for your loan. Okay, you bring Julio the plans, the elevations, the contract, because we want your appraiser to go out there with all this stuff. Right? We're gonna have the appraiser go, here you go. Here's the elevations. Here's everything. Here's, you know, they'll know the lot. They'll see the value. If it's over 1 year, you get to use the full value as the total down payment. If it's less than 1 year, guys, you have to use the purchase price. So if the guy, woman and man paid 150,000,
Okay, got it. For the whatever you paid for the lot
right, within 1 year.
within 1 year.
Yeah.
Okay.
So now he goes out there, he praises it, boom, boom, boom. You come back and say, Michael, you know, I want to borrow all my hard costs that it's going to cost me. We have a construction worksheet that Julio put together, says, hey, and they break up the hard costs, soft costs, permits, things like that. Okay. And you can finance all of it if you have enough equity. We go up to 90% of the value.
Wow.
So a couple things that people forget about, and you all as realtors and professionals out there, one thing I like to remind people is when you do a construction loan, you'll see 2 things that people are not so familiar with. One is contingency reserves. So contingency
Just
reserve.
in case.
Yes, thank you. It's the old kitty, right? And you can put that in the loan. So the credit union, the builder tries to collect contingency reserves, but once the lender starts to intervene with the builder, they understand the lender needs to hold that money, right? It's held in kitty. It could be part of your loan. So for example, your example, you say, well, I want to build 300, but we hold 5% of, it would be 5% of your hard costs. So let's say your hard cost is 250 out of that 300,000. You can do the math real quick, 5%, 250,000. We'll hold that money for a kitty, for example. So
Right.
excavating comes out there and hits rock, or you want to upgrade those 42-inch cabinets that has the nice crown
Oh,
molding
that's
at
nice.
the top. You know, we can use that a lot of money, and you can put it in your loan. But if we never use it, at the end of the rainbow, when the house
It
is
goes
built,
back.
yes, you can do 2 things. You put it back in your account. Say, Michael, I want to borrow that extra money on my loan amount, or Michael, I want, you know,
Equity.
yeah, there you go.
What are the rates on those? Is it pretty?
On the 5 years, are you talking about the 5-year arm that we currently have?
Yes.
We're still sneaking in the 3s.
No way.
Yeah, but
We gotta talk.
yeah. Well, here's the great thing, guys. And Julio, you were talking about the points and stuff like that. We talked about this. You know.
Yeah. No, but
No, you got it. we talked. Well, Julio and I talked about this. It was like, what are you seeing out there in the field, guys? Everybody's trying to charge 1.5% to 2% origination fee just to do a construction loan. Washington Federal.
Wow.
We're one of the premier lenders in the market.
Not to throw anyone under the bus.
What's that? No, that's right. We're one of the premier lenders. We know what we're doing in construction. There's Washington Federal out there. Johnson Bank is no longer. They were bought out by another outfit. There's U.S. Bank, and good luck trying to close that in 9 days. I'm not talking bad about anybody.
Yeah, that was true.
They do construction loans, guys, but we only charge $645 origination. We can make it so you don't have to pay. But if you want to buy points and bring it right down, you can.
That's awesome.
And that's
Well,
across the board in all our loans. 645 origination fee.
Yes, on all our loans, exactly.
So just so you guys know, they do mortgage loans, regular, conventional FHA loans.
VA.
And typically when you go with the broker, the fee is pretty substantial, right?
Oh, it is.
Yep.
So
We're nonprofit credit. That's all. Second largest in the state of Arizona. $3.4 billion in revenue. Now
wow.
there's Desert Financial, is over $10 billion. Is that too big to be accredited? I don't know.
Yeah.
But they do a good job too. But they don't get specialized in construction like us.
Okay.
And Julio, if you want to tell everybody about the new products we're introducing July 1, that's going to help a lot of our
All right.
realtors out
Let's
there.
see.
So I didn't memorize all of them, but we do have some pretty good ones. If you all know about the Home Plus, I know it's been kind of, getting pushed out because of the rates. We're going to have a couple similar products, zero down products.
So Home Plus is a down payment assistance program,
Yes.
right? For you that you don't have the down payment for your first home, there's programs out there, which Home Plus is one of them.
Mhm.
It's a down payment assistance program that you guys still have, because I know other lenders were telling me that they're disappearing. Correct?
Yeah, we still have it, but it's, it's changing a little bit. And the ones that we're bringing in, they're going to be a lot better, easier to qualify. We're going to be working on, taking off a lot of the parameters that we had in the past. We don't have a lot of details. They're going to be coming out late June,
He's
early
got the
July.
details.
July.
Yeah.
Yeah, but the good news is it's going to help our first-time home buyers. 100%
Yeah.
financing.
100% finance.
Yeah, and the great thing is, I know it's difficult for us realtors out there to put a pre-qual out there for 100% financing, right? What if you already gone through underwriting?
It's even better.
Yeah, so you don't sit there and throw a pre-qual. This
It's a pre-approval.
It's a
that's
pre-approval.
right.
Yeah.
Members, we call them members. It's grading. So
Right.
then you go through a little pre-approval process. You provide your documents, like, hey, I got somebody that's qualified here now.
Ready to go.
And
That's
what,
huge.
with our current rates, we're beating out a lot of our competition. We're normally in the top 5% with the best rates,
Yeah.
but we also offer a quarter percent off.
Mm-hmm.
We have a special program,
Purchase.
purchase promo, quarter percent off if you, one, become a member, two, set up direct deposit and automatic payments to your mortgage, and that'll get you another 4% off your rate.
Oh, wow.
Now,
So what are the rates now with you guys?
I just priced out a jumbo yesterday.
Okay.
Take a guess what you think your 30-year fix. I'm sorry to do this.
4.5?
We're close to that. Yes.
Really?
Not a jump. 10% down. But I'm really offering a lot. So the way credit unions work it is they have a bucket for each product, right? So it's a budget, right? 5, 7, 10, and then a 30-year fix jumbo. Well, our 10-year, I'm offering to my clients because why? It's about 5-8% better than my 30-year fix.
Wow.
When you see the amortization tables, you break it up after 10 years, right?
It's a big chunk of change.
Heck yes, it is. And you're saving all kinds of money in all the payments for 12 months for 10 years.
Definitely.
And then my 7 years slightly better than the 10, and 5 slightly better than the 7, but the 10 is really,
And we won't hold your feet to the fire because we know rates change daily, right? So
Right.
what are they at right now? Like, what's the average, like, for the 7-year, 10-year?
well, the 10-year yesterday I quoted 4.125%. 4%. Mm-hmm.
So some people thought back when the market crashed, they were blaming the ARMs or the adjustable rate mortgages,
Yes.
blaming the banks because they sold them a product
That's
that was
right.
going to adjust. Well, if you know what you're doing, and obviously you want to ask the professionals, right? How do I use this program? How would I benefit from it? Is it a good fit for me? Most people live in their homes on average 4 to 6 years, right?
Mm-hmm.
So if you're going to have a 10-year mortgage, when it adjusts, I mean, by that time you probably sold your home already, which I can attest to that. We lived in our first home, we lived there 2 years. The second one, we lived there 6 years. The third one, we lived there for 2 years,
Mhm.
2 years, 2 years, and then 6 years. So I can attest to, being, maybe I'm crazy, but that's.
No, so the 10-year, to your point, is that bucket where people are like a little uncomfortable with our, but it's not. It's principal and interest.
It's a regular mortgage that is going to, instead of maturing in 30 years or being due in 30 years, it's going to be due in 10. And you can refinance at that point if you want to, or if you sold your home, then you have to.
Or you go variable. Let the variable rate take its course because it's amortized over 30 years. And there's caps on it too.
Right.
Yeah.
Oh, okay. So
what? It's 225.
Okay.
So first year 2%, up higher or lower from the original rate, and lifetime 5% higher from the. So you can't do that year 11. So 10 years from now, you go, okay, where's the margin? Where's the index? And guys, our margin's the lowest. I want to get. Do I really want to get this detail? Margins.
Well, you want to go deep because they don't understand, right? What is margin?
So that's a great question. So banks, lenders charge between 2.25% to 2.75% on that margin. Now your big banks like JP Morgan Chase, they're gonna take that 2.75 because guess what? They're gonna get as much more. And then you add your index, depending what
the rate, the market rate
is, yeah. And a lot of people, Treasury's gone. Nobody's using Treasury on those arms. They're using LIBOR, that's gonna be gone. So they got a Sophia, you might have heard something about that. Yeah.
It's been a long time.
Yeah. Mm-hmm. So they're using that now. So it's great to.
What is it called?
Sophia.
Sophia?
Yeah, it's like Sophia arm. So yeah, I didn't remember what that spells. But we just transferred to it. It's the indexes are very low, less than 1 right now.
So the index is basically the baseline, right? From there it goes up.
Yeah, that's right. The margin's always set depending on what the lender sets. And since we're nonprofit credit, we usually do 2.25.
Okay.
You see? That's one of the other advantages. So if it goes variable, it's our job. I mean, I've been doing this 25 years, 11 months. Not that I'm keeping track, guys. But it's our job to be professional and make sure that we consult and teach them and make sure they understand the product. Years ago, to Juan's point, people did these option arms. Remember those? Those were at 15-year fixed or pay the interest only or back part of the interest, but the other part of the interest and back loan. Remember that?
Yep.
That's what people got really
negative amortization loans.
You got it.
Yeah. So there was a lot of creative products they came up with just to make it happen. Now things are more straightforward, and obviously their job is, I don't know if you guys have a fiduciary duty, we do, to make sure that we offer what's really in the best interest of the client. So we will never put you in a place that we're going to set you up for failure, because we want to continue doing business with you, your family and friends. So for us, we have a vested interest in you and making sure that we do things right. Obviously, when I sit on the other side, I want to be treated like that, right?
Sure.
So it's important to sit down with a professional to make sure that they give you the right information for you to make an educated decision. And that's huge, guys, because a lot of people, like I was telling one of my clients, he calls me the other day and he's like, Juan, where's my 1031 exchange form? And I'm like, what are you talking about? He's like, yeah, my accountant is asking for it. And I'm like, well, when you sold the property, you never told me you were going to reinvest the money.
Mm-hmm.
That has to be done before that, but you're always in a hurry, right? I says, we need to sit down. We need to talk. I need to know what your plan is. I worked at Chase, and I got to thank them for the opportunity.
Me too.
When I did it, they said they taught us how to do a profile. Okay, you're coming in here. What's your goal? So when I sell a home, I do the same thing. So what are you doing? So I don't want to just sell the house and now where are you going to go? I don't know. I'm like, well, we got to find your home, right? So going back to the story that my clients asked me for the 1031 exchange form, there is no such form unless you tell me what your plans are for the sale, what the purpose is. If you're reinvesting the gains, great. I'm not an accountant, but I can guide you and say, hey, this guy will tell you what to do. We have a company that we can refer you to and set you up for success. So that being said, when you guys are looking to buy a home, when you're looking to get a loan, that's the reason we bring these professionals, so they can provide you with the information that you need in order for you to make those decisions. We don't want to just say, hey, we'll help you get a house. Here, we're under contract. You close. See you later.
Thank you, Juan. I appreciate that. I really do. I mean, I was with the broker shops. I was at the banks. I didn't do a lot of flip-flopping around. I've been with the credit union 6 years now, and it's that family feel. We give back to the community.
That's awesome.
We used to be I used to be a big part of the SBUs. We had that, for Special Olympics type things. Julio got a strong background with a lot of nonprofit things like that. I don't know if you'll elaborate this time, but the man has a lot of background when it comes to this type of stuff. But
there's a quick story. I mean, the reason I got into mortgage lending is exactly 2008, 2007. My parents lost their house. The lenders didn't explain anything. They just said, here, you're approved. Go buy the biggest house you can find. And, that really stuck with me. And I'm like, hey, I want to learn what they're doing and I want to do it right. And I want to make sure that at least for the majority of the people that don't speak English that got taken advantage of, that I can be that person that can help them. I am bilingual. I love helping people, and I treat them like family. I treat them like I wish my mom would have been treated, was 14 years ago. Fortunately, there is a lot more guidelines now that protect you, keep you safe. So even if somebody tried, there's your application will go through so many other hands that they'll make sure that it's in your best interest. But I'm here to treat you like family. I'm here to make sure that you're getting the best deal, and I'm here to educate you as well. So yeah, that's why I became a lender. I've done a lot of nonprofit work. I've advocated for multiple different communities, and I'm here to make sure that we give you the best deal on your largest investment.
Yeah.
A couple things here. He does have a lot of passion. Everybody, he does, and it's great. That's why I hired him. Other thing is, I want to touch point a couple good points you brought up. Taking your time more. Now we have more time a little bit. It's kind of slower, whatever. Maybe not. I'm still not slow, but I still have my realtors working hard. Yes, thank you, Juan. But just making sure when I was explained to you, I've been with all these, I don't want to say, all these great former employers, right? But the credit union does kind of bring you back in, a little more consultation, a little more time to take time to explain products and services.
I think that's huge, and that's key, because if you treat people right, they'll come back to you.
They do. True fact, I don't do any social media.
That's awesome.
You want to see my numbers from last year? Pretty good. Another thing you pointed out, I thought was a good point is, hey, we're not financial advisors or CPAs, but we do make some point of recommendation, but we also make sure we're professional. We refer back to your CPA.
We give you experience based on our experience, and what we do is we just guide you through the process. But at the end of the day, you need to do your own due diligence and make sure that you align yourself with the right professionals for any big decision you're going to make. And obviously, buying a home is the biggest investment you'll ever make in your life. And we appreciate the fact that you guys work with us and give us that opportunity, and we appreciate it. And that being said, I appreciate you guys being passionate about what you do, because that's what I do this for that reason too. When I bought my first house, nobody wanted to help me. So I know what it feels to be on the other side, and we coach you. We tell you these are the things you need to do in order to get pre-qualified or get into a home, because we all want to help others get to that point where they're financially free. And it breaks my heart to see people in their 60s and mid 60s buying their first home out of necessity because the rent's too high.
Yeah.
So nobody's taking the time to educate our community, Hispanic, Anglo, everybody. I think we all have especially us, that we have this knowledge. I believe in God, so I think God put me here for a reason, not just to have a beautiful life, but also share what I've known or what I've learned so that others can have the same kind of outcome. Yeah.
I get goosebumps. I mean, I'm sorry, I do. But the fact is, if you have that passion to still help people get in homes, things like that. I mean, most of us have been through where we just, take a number.
Right.
We still have that passion come back and reel back in. And, Julio's going to be a great point of contact for y'all. He really is. I'm always going to be very supportive. That's why I'm here for him today. One thing is, we are full service. We are creating to offer every product that you can walk into, your Wells Fargo, JP Morgan, US Bank. But then the great thing is, I've always been a believer in when I do sales and consultations. Now I can come back. I can come up front with my rates are the best. We're not a profit,
That's awesome.
But before you just, you throw the back right in the back burner, and you go, but guess what? You got me, but we got more than that now. You get the credit in, we keep the loans in house.
They get you and they get the good rates, the good deals.
And we underwrite process like, Julio says here in our corporate headquarters.
That's awesome.
So he can tap on anybody's shoulder and go, hey, I need help with Juan's loan. Please help.
Now we know the regional manager, so we can.
No,
but again, it's all. Thank you guys for taking the time to come here and visiting us, and also sharing your knowledge and sharing your products. And if there's any questions you guys may have, we can. We'll put the number for Julio here. We can go ahead and share with you. And I mean, we're here as a resource. We don't want to just take. We want to give as much as possible, so that you guys have all these resources for you guys to make those decisions when the time comes. Anything else, guys, before we go?
No, I think
was there a rumor about a 3% jumbo coming, maybe?
It's already here. So as long as PMI, but again, do you really want to sit there and send a pre-qual out to the member or to the listing agent saying, hey, I got a pre-qual of 3% in this market? No. No.
We got a very strong buyer.
That's right. That's right. That's right. Strong profile on the other note. But you know, again, the pre-approval, we talked about that. You know, we are doing them. You know, if the member, we call them members, client, your client,
Of course.
our client, right? If they have 10% down, you can always say, I have 10%, right? In case of the low appraisal, you know, the appraisal waiver thing,
yeah.
right? So we try to accommodate you realtors the best we can on our pre-calls and make sure we go through, hey, they really do have 10% here, Juan. Let's put 10% of pre-qual and, you know, figure out the financing, you know, because we can do 10, but we can do as low as 3% on it, which is
Wow. That's incredible. Awesome. Well, thank you so much for your time, guys. I appreciate you all.
Thank you for
Thanks for
having us.
watching.
Thank you guys. Thank you.
My pleasure.